Hello, welcome to our potential tax law changes proposed by the new Biden administration virtual workshop. I want to thank you all that watched our last tax planning video. Actually had some really good feedback, and someone even said they thought that it was riveting. A lot of things I could use to describe that video. I don't think riveting would have been one of those, but thank you, Janet, for that. So moving on, today we'd like to share with you some of the tax law changes that President Biden proposed during his presidential campaign and what they could mean for you. There's so much information out there to digest, so our hope is to simply simplify it down to some of the key items that we feel our clients would like to be aware of. Our goal is to help you make the path towards your financial goals tax efficient, so we need to be aware of potential tax law changes. This is merely a non-political summary of what was discussed and is only intended for informational purposes. Before I begin, I find it as always important to review the 5 key areas of financial planning. These areas are preservation planning, retirement planning, tax planning, estate planning, and investment planning. Even though today's presentation is focused on tax planning, as a comprehensive wealth management firm, we try to always consider the impact of any recommendation we make on not just one, but all these areas for our clients. During his campaign, the now 46 United States President, Joe Biden, released a proposed tax plan with a key focus on higher taxes for the wealthy and corporations. While these proposals are not yet law, it still could be helpful to be aware of them. So if they are considered, you can be better prepared. This workshop will look at some of the proposed changes. President Biden proposed increasing corporate tax rates. Under the Tax Cuts and Jobs Act, the peak marginal corporate tax rate was reduced from 35% to 21%. Under the Biden tax plan, the corporate tax rate would be increased to 28%. Also proposed is an increase in the marginal tax rate for top earners, which were defined as individuals making over $400,000. Biden's tax plan would raise the top marginal income tax bracket from 37% to 39.6%. The Tax Cuts and Jobs Act lowered the top marginal bracket from 39.6% to 37% in 2018. The proposal was not specific, but here's a visual of what married filing jointly tax brackets might look like if this happens. You see 2021 on the left and 2022 proposal on the right. Biden's proposal calls for lifting the capital gains and dividend tax rates on filers with income above $1 million to pay ordinary tax rates on their dividends and capital gains, no matter how long they have held an asset. This would imply that large earners or large gains could see those rates, usually tax advantaged, rise to 39.6%. Here's a visual of what capital gains tax rates could look like if this happens. Instead of 3 rates, there will be 4, as you can see in the right column for the 2022 proposal. Biden's tax plan includes a cap on itemized deductions of 28% for those with earnings more than $400,000. This means for each dollar of itemized tax deductions, including charitable contributions, a taxpayer or couple filing jointly would only receive a maximum benefit of 28 cents. This 28% limit would hold true even if a filer is paying a higher marginal tax rate. For example, if this were enacted and you have $40,000 of deductions, then even in the highest brackets, you would only save 28%, or in this example, $11,200. Biden's tax plan would phase out small business income deductions for taxable income over $400,000. This is a complicated piece of legislation, and his proposal did not share details, but we still need to acknowledge it. proposed is the elimination of the stepped-up basis. Biden's tax plan wants to put an end to the stepped-up basis. What is the stepped-up basis? Well, it's a tax law that applies to estate transfers. When someone inherits investment assets, the IRS resets the asset's original cost basis to its value at the date of the inheritance. The heir then pays capital gains taxes on that inherited basis. For example, if an individual invested in a $300,000 marketable security position that is worth $500,000 at the time of their death, their heir would pay capital gains on anything over $500,000 if the position were ever sold. This is because they receive a stepped-up basis. If Biden's tax proposal were to become law, heirs would not inherit a stepped-up cost basis, and if they liquidated the position soon after receiving it, would receive $200,000 of capital gains in this example if they sold that $300,000 position for $500,000. One of Biden's more talked about tax plan changes is to significantly reduce estate tax exemptions from the current $11.7 million per individual back down to $3.5 million per individual immediately. This means estates over that value will be subject to the estate tax. This is something those who have larger estates should be aware of. Albert Einstein said, "The hardest thing to understand in the world is the income tax." Will Rogers said, "The difference between death and taxes is death doesn't get worse every time Congress meets." So true. Biden's proposed plan could change tax laws with a focus of taxing corporations and high-income earners. With both a Democratic House and Senate, Biden's proposed changes need to be watched carefully. As of now, tax change moves were not expected immediately, as the new administration has initially focused on getting the pandemic under control. We're keeping a watchful eye on any changes that could affect your situation. We believe that taking a proactive approach is better than a reactive approach, especially regarding income tax strategies. If you have questions, please give us a call. So what can you expect from us? You can expect regular communication, more frequent discussions, and you can expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. Thank you for your time. Remember, your health and well-being is our highest priority. We appreciate the opportunity to assist you with your financial needs. We would also like to help others in 2021. In fact, we would be honored if you could share some names of friends to send this video to, or add to our mailing list so that they can benefit from our information. Thank you again for your time today, and remember, a proactive approach can many times lead to better results than a reactive one.